Billionaire investor Ray Dalio founded Bridgewater Associates, the biggest hedge fund in the world. Bridgewater oversees investments worth roughly $150 billion. Dalio, who is in his early 70s, has a $20 billion personal net worth. With more fortune than Walmart, heir Lukas Walton, and fellow hedge fund investor Carl Icahn. He ranks as the 36th richest American. Who is Ray Dalio? Early life. The American dream is embodied by Raymond Thomas Dalio. He was born in New York City to a housewife and a jazz pianist. He didn't exactly come from a prosperous household. Ray put in a lot of little labor to make a few dollars. One of them might have changed someone's life. He began caddying at the Links Golf Club when he was 12 years old. There were a lot of veterans and Wall Street pros there. He took notes while listening to them. Ray made 200% profit of his $300 first investment the same year. His investment holdings by the time he was in high school totaled a few $1,000s. Reading about someone who built a fortune from nothing can sound quite corny, but there is always something we can take away and use in our own lives. Number of our age or social position. It is never too late to change some habits. Ray's life has something to offer people of all ages. Studies. His time in high school wasn't the best. Ray struggled to focus and get excited about his academics. Throughout his schooling, he continued to trade stocks. He finally got his stride in college. He was also drawn to something novel, commodity futures. He rapidly saw how he could make more money than just from stocks. Ray was accepted to Harvard Business School as a result of his academic success in college. Who is Ray Dalio? Work. He encountered employment in the banking sector while still in his early academic years. Ray worked as a clerk for the NYSE while doing an internship at a trading company. He continued to be employed in the field after Harvard. He found it frustrating and it brought back memories of his early studies. Ray desired complete freedom to act however he chose. From his securities firm, he already had a large network of contacts and clients. What are Bridgewater Associates? Let's focus on a more captivating aspect of Ray Dalio's life. In 1975, he started Bridgewater Associates in his New York apartment. Ray's contacts from his securities firm made up the majority of Bridgewater Associates' initial clients. However, the early 1980s proved to be challenging. Ray anticipated a collision. He made wise investment in gold and bonds in the beginning. He believed he was an expert market forecaster. Bridgewater almost went bankrupt when the market started an amazing bull run. To keep solvent, Ray was focused. Ray was forced to fire every employee and take out numerous loans. Thankfully, he learned from his errors. Ray Dalio's investment philosophy. 5 key themes from the foundation of Dalio's investment philosophy. Number 1. Investment possibilities and dangers are influenced by the economy. Macro investor Dalio looks at economic patterns to spot possibilities and spot threats. In contrast, the micro investor gives more importance to company-specific technical research. In 2000s, Dalio's macro outlook brought Bridgewater particular praise, since he has studied the economy for a long time. Dalio recognized warning indications from the 2008 financial crisis. He made adjustments to the Bridgewater portfolios to get them ready for a downturn, and it worked. While the typical hedge fund lost 19% of its value in 2008, Bridgewater's Pure Alpha Fund increased. Number 2. Investors are seriously threatened by inflation. Inflation's capacity to erode purchasing power and wreak havoc on investment returns is something Dalio respects in a healthy way. He has therefore long advocated for using gold as a backup form of currency. The all-weather portfolio, a well-known Dalio investment approach, includes a 7.5% allocation to gold. The all-weather portfolio is Dalio's go-to investment strategy for navigating uncertain economic periods. In addition to holding gold miner and producer companies, Bridgewater also hold gold funds. With a 2.15% allocation, the gold ETF SPDR Gold Shares is Bridgewater's 11th largest investment overall. Number 3. By mixing assets that are uncorrelated, investors can reduce risk. Dalio strongly supports diversification. To lower your risk-to-return ratio, he specifically advises diversification over 15 or more uncorrelated investments. Assets that are not connected do not move in tandem, either positively or negatively. For instance, there is little link between gold and the S&P 500, so a decline in the S&P 500 doesn't always affect gold spot prices. Bridgewater portfolios have a wide range of assets, industries, and currencies. In addition, Dalio has acknowledged using cryptocurrency as a diversification tool. Number 4. On fully priced stocks, investors should take profits. Dalio does not just purchase and hold stocks. He favors selling pricey stocks for a profit and then reinvesting the proceeds. The portfolio is rotated, as he puts it. Targets for reinvestment should be cheap stocks, good companies that are trailing their industry or the overall economy. This rotation is seen in the 2021 portfolio adjustments at Bridgewater. Bridgewater upped its holdings in emerging markets funds while decreasing its stake in the SPDR S&P 500 fund. The action reflects the perception that the window of opportunity for U.S. large caps may be closing. In the coming months, it might be preferable to choose smaller, developing economies. Time will tell if Bridgewater's wager comes off, although the S&P 500 has exhibited weakness in January 2022. Number 5. One of the main causes of investment losses is biases. Investors frequently have a positive or gloomy outlook on the market or a particular investment. Those are prejudices. Any type of directional thinking can persuade an investor to hold positions for an excessive amount of time and miss the chance to sell at a profit. Admittedly, letting go of biases is not humanly conceivable. You can examine your investment decision-making process on a regular basis. After recognizing your directed beliefs, consider the alternative situation. Dalio believes that diversifying is the best course of action in this situation, just in case your presumptions about the certain asset class, industry, stock, or the market as a whole prove to be incorrect. Dalio's betting big on emerging markets, consumer staples, gold, and Alibaba. Emerging markets. Emerging markets ETFs make up the top 3 positions held by Bridgewater. It is noteworthy that Bridgewater has significantly boosted these 3 holdings over the past year, while decreasing its exposure to the S&P 500. China is a geographical concentration for all 3 ETFs, and the financial and technology industries are sector concentrations, while VWO has minor holdings in the Philippines, Qatar, Turkey, Greece, and other countries. EEM also owns South Korean stocks. Bridgewater has exposure to both small and large businesses in these emerging economies, thanks to the 3 funds. Consumer staples. According to the Bridgewater portfolio, manufacturers or sellers of consumer staples are the best individual equities to buy. This is just another play on inflation. Consumer staples businesses frequently fare better than discretionary goods and services in inflationary times. Even when prices are high, individuals continue to purchase items like toilet paper and bread. Beverages also fall under his heading. As an illustration, Coca-Cola successfully increased its price in 2021. In reaction to rising input cost, Bridgewater owns a significant stake in Coke. The CEO of Berkshire Hathaway, Warren Buffett, also favors investing in the beverage manufacturer. Gold. GLD is an ETF that's backed by physical gold. Bridgewater's portfolio raised his investment by about 50% from the previous quarter. It is hardly surprising that Bridgewater would boost its gold holdings, given the rising rate of inflation in the US. Alibaba. Even though Alibaba had a difficult year in 2021, Dalio remained enthusiastic about the Chinese internet behemoth. In spite of the declining share price of the company, Bridgewater increased the number of Alibaba shares it held in the second half of 2021. Dalio currently prioritizes the Chinese market, and Alibaba does experience consistent demand for its goods. He probably regarded Alibaba's value decline as a chance to acquire more shares at a discount. Investments Ray Dalio avoids. Economic conditions determine which investments Dalio steers clear of. In his words, the assets and liabilities that you would most like to have and those that you would most like to avoid change with the paradigm that exists at the time. Right now, Dalio sees a paradigm that creates negative inflation, adjusted returns for cash and bonds. Cash. As previously mentioned, Dalio is worried about inflation in the United States, Europe, and Japan. According to him, these economies are in danger as a result of three key factors: spending that outpaces earnings, social and political unrest, and China's rising power as a world leader. In light of these variables, he advises decreasing cash holdings, not just in dollars but also in euros and yen. Of course, the majority of the investors still want some cash on hand, although it may have poor to negative returns. Cash is nonetheless very useful in times of monetary crisis. Bonds. For the same reasons, Dalio advises limiting bond holdings. He encouraged minimal exposure to a dollar, euro, and yen currency and debt assets in a January 2022 LinkedIn post. More so than in the past, Dalio now has a bearish outlook on bonds. That is clear from the fact that his 1996 developed all-weather allocation thus suggests a substantial debt position. The all-weather portfolio is made up of 30% US stocks, 40% long-term treasury bonds, 15% intermediate-term treasury bond, 7% diversified commodities, and 7% gold. From our discussion, what have you learned? Please let me know by leaving a comment below. And if you enjoyed this video, please press the like button, turn on the notification bell, and subscribe to Wealth-ology for more videos like this. Thank you for stopping by to watch. See you in our next video.